Good afternoon. Welcome to Options Center. I wanted to give a quick update on the daily point of view, just to show that price action is really just not doing anything. We're moving sideways. We're retesting all of those resistances that we've been talking about over and over. And I'll just give you another perspective, especially if you're new here, so you can see what we've been looking at, what our pathway is, and where we go from here. So tomorrow is the employment situation. That could be a catalyst. And then I'll give you another option. We have CPI next week. So honestly, the market could just be marching sideways until one of those catalysts is the breaking point where markets either drive higher, and that would be considered a breakout at this point, or start to head lower. So we'll see. Employment situation is before the market open tomorrow. Okay, so things to be aware of. All right, so if you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. Don't forget to like the video. Thanks for all the support. And somebody said congratulations the other day. I would consider a friend of mine. And I said, oh my gosh, we hit 1,000. Finally, 1,000 subscribers. Love it. I want to keep growing this channel and getting good information out. So here we go. We have SPY on the daily time frame. Right now, we're testing. We're at this confluence again and again. First one, this channel from the bottom to this top to this top. Okay, that's one confluence. Our primary projection, our pattern, I should say, is this top trend line here, from top to top to top. That would be our expanding wedge, our expanding ending diagonal trend line. And then the next is this really sharp, moving to the upside, rising wedge. And we call it a bearish rising wedge. Okay, so we're at all those confluences right here. Sorry, I get a little cold. Price action dropped down. We had highs. We made a new high here, and you see we're forming a resistance area. I'll just put another line crossing through here, just give you an idea of this kind of confluence that's happening. So we have a top, we have the all-time highs, we broke down from the trend line, and we're back testing this trend line. That's simply what we're doing. It's very simple. We're also in confluence with all of those former current trend lines there as well. So you see all the confluence that's going on here. So again, if you're new here, here's what we're looking at. An expanding ending diagonal on our Elliott wave page. This entire move has gained momentum in each move each wave. So this first wave, A, B, C for 1, A, B, C for 2, and then a larger wave, A, B, C for 3. Wave 4 is bigger than wave 2 for an ABC down, and it's expanding in just a dynamic, rocket to the upside. We're losing momentum right here at the 127.2 extension. The 130% is also a good one, and that's probably right above there. To bring us right at the top of this pattern trend line. So that's all we're doing. It's very, very basic. Keep it clean, keep it simple. And now we're looking for this pattern to break. So we're looking for a move down, a sharp move down to kind of mirror this side. And we'll, as we do these videos, we'll kind of show what we expect. I expect somewhat of a mirror image. It's very usual, very common for that to happen. A mirror image, meaning the steepness of this. So when we do get our bounces, we just have to be very wary that they could be massive rip your face off rallies, or it can be the complete opposite. It can just consolidate sideways, very shallow, maybe a 40% retracement, and then continue on if this is a 5-wave move to the downside. All right, so it's just something to keep in mind. So you have this move here, massive, and you see each correction was just a little bit sideways. And then you have this correction here where you have your initial move, and then you have a rip your face off rally that lasts weeks to months, and then a continuation. And again, just a massive move to the upside for these corrections. This is a corrective wave. So this, in my opinion, is going to be a higher degree top. So this first wave is going to be an impulse wave. So it should not look much like this. It should be where we're getting the overlaps of wave patterns. Okay, this one should be much more clear to the downside, much more impulsive. No crossover of the wave patterns. Okay, now the rest we can just kind of zoom through. This is just information. You can go back to other videos and just check it out. I want to show you one more thing. So we want to see where these targets kind of go. Our first target to the downside that will take weeks to months is this consolidation zone. Okay, I'm looking around this 473 area for this initial move after we get this back test move down. That's going to take weeks to months. It's not going to go straight down unless it looks like this. You can consider it straight down, but there's always ebbs and flows even when you have this steep of a move. QQQ. Let's put in our daily frame here. The trend is our friend. We had this wedge, broke out from the wedge, and now losing momentum, just really heading sideways. Do we hold on to this wedge and go higher? Or do we break down and have a fake break here? So what we'll be looking for initially, after we see some sort of breakdown, if we see a breakdown from this 435 area, this is going to be our first target. This trend line here, and also around this 400 area. All right, and I think further from there, but we need to see what kind of bounces we get. If we slice right through, then we'll be looking for the next level down to 382, and then a back test, possible back test of the trend line. Moving in just a little bit closer, this is really just a sideways price action. This has gone nowhere since February. Got up there in February, broke down, got above, and that's it. So now what we're looking at is this new trend line. Since we had all-time highs here, we put our new trend line from the bottom all the way to this point, and then again, all we're doing is back testing. We're just holding on to that back test going into the jobs numbers. And again, this is when a 65-minute, we can draw kind of a triangle. So perhaps tomorrow we get a drop to the bottom of the triangle and continue to and then kind of march sideways until, and I'll show you just on SPY real quick on the 65 before we end this, that will hold a pattern until CPI on Wednesday. IWM. Putting on the daily, again, rising wedge, already had our resistance. I think we're just wasting time in this wedge. When this wedge breaks down, I think that will be our move. DIA. Trend is our friend. Again, a rising wedge. Broke down from that wedge, and it's just simply back testing. SMH. SMH sort of doing the same thing. We really we're still above in this, I suppose you could call it a channel, still above there. And then if you go down to the, I'll show that in a minute. I want to keep with the daily time frame. But really, it's just been going sideways. You had our initial impulse move down and then basically sideways since then. And finally, VIX. And with the VIX, it looks like you continue that pattern. We had this megaphone type pattern. We had a corrective move and an initial impulse wave up and now correcting again. Perhaps we make it right down to this. This would be a good area right down about where we are now to about 1350 is a good zone that perhaps we get some support there. But we do have a gap here as well. If we start closing the gaps, and I assure you we'll get all-time highs at that point. But if we hold kind of this trend line here, then we're probably going to see some sort of catalyst either tomorrow or going into CPI on Wednesday. Now, give you a quick look at SMH on the 65 and then SPY, and then we'll just go ahead and end this. If you're swinging this, a great swing to the downside setup. Now, obviously, you can be stopped out with the new all-time highs, or you can give yourself a 2-3% move if you're buying stock. 2-3% stop. So this is the impulse move down, and in our correction we have a zigzag here in A, B, C, and you see this is a wedge, a rising wedge, broke down from the wedge and is now back testing. It looks very similar to NVDA, and it's clearly going to follow what NVIDIA does overall. When NVIDIA seems like it really has a bear flag here and wants to break down. You had our initial move down, and again, an ABC pattern. That's a flat pattern, and now an impulse wave to the downside. And I do think since we broke this rising trend line, we're just back testing, and I believe there should be a continuation down from NVIDIA. But just to keep in mind for SPY, when we get down to that 65, we can kind of see what possibly might happen. So we did break down from, again, this rising wedge, and we're back testing that wedge. But now we can kind of draw ourselves a little triangle just in case tomorrow brings us a down move into, or maybe we get it to the end of the day today, in this last, couple hours. It's almost 2 o'clock. But just watch the bottom of this triangle, and perhaps we move sideways for a couple more days, a couple more trading days into Wednesday CPI, which will be before the morning. So really it's just Monday and Tuesday trading. So maybe Friday, Monday, Tuesday, and then Wednesday either break to the outside or downside. That could be possibly it. The other scenario is that we have our back test, and the jobs number really is the catalyst that breaks the camel's back, the straw that breaks the camel's back, and we break down from this. But this will kind of be the be all end all here to watch. We're holding the gap right now. I think that's all I got for you, and that will give you a perspective of two scenarios I'm looking at, either trading sideways into CPI, or tomorrow breaking down from there. I do think this is a good top. If we do break up from this point, then we'll have to reevaluate, again, readjust our swing positions to the downside. But if we go sideways into CPI, I will put hedges to the upside on in case we break up and break to the upside. All right, just to save our account and have good management. So that's all I got for you. Thanks for joining us here at Options Center. Have a wonderful day. Don't forget to like the video, and we'll talk to you tomorrow.